We've got a really excellent panel from a real range of experience across the industry. So we'll be putting some challenging questions to them, I'm sure. So I'd like to first invite Erik Goldsilver, partner at Gowling, up to the stage because Erik's going to be anchoring this one. And I'll invite the panel as well. John Mayer from SP Angel, Libby Sharman from BHP Explore, Pim Kalisvaart from Hawke's Point, and David Bellingham from HCF International and Providence Capital as well. Thanks, guys. Thank you, ladies and gentlemen.
Thank you, Adam. So let me just get settled here. I was going to start by asking and answering the first question. The first question I wanted to ask to myself, and that is your last name really Goldsilver? And the answer is yes. My last name is Goldsilver. I do work in the mining industry, in case anyone was wondering. We're going to spend the next 30 to 40 minutes talking about opportunities and challenges for junior mining companies in the current environment. And really, it's a panel discussion. We'll hopefully spend about 30 minutes going through some questions and then opening it up to the floor if anyone has any specific questions for any of the panelists. So let's start off by asking sort of a general question here. Has the financing journey changed for junior mining companies in the current cycle compared to previous cycles? And are the players and the processes different in this current environment? And we will start with David at the far end.
Okay, thank you. Thanks for the invitation. I think what's going on at the moment is pretty interesting in that there is a reduction in capital coming from the traditional banking sources, and those banking sources are also being more conservative in their structuring. So ultimately, you've got a reduction in liquidity from banking, and this has provided some opportunities for some debt funds to come in that would traditionally be providing more expensive capital, but they are more bespoke and also faster. So they're justifying their higher returns. So it's interesting. It's a good trade-off that the mining companies are needing to come up with, because they can either go for a traditional longer-term financing, or they can get ahead of the curve, pay a bit more, but get into production faster.
Pim, any thoughts?
Yeah, I think in addition, what we see is on the equity side, there's different sources to capital to, as you called it, the previous cycle. I'm excited to see that, BHP is actively investing in juniors. And I'd love to see more of the majors do that. We've seen it in the gold space. It's been going on for decades very successfully, but it's great to see that the base metals are joining the fray. We've obviously had the royalty companies. They were there as well in the previous cycle, but I think they're much more pronounced now than they were in the past. I said at a similar conference this time last year, and then we spoke about specs, but I think that's come and gone. But it goes to show that the mining industry is open to other potentially innovative ways of financing, and I think it's a good way for the industry to keep evolving and attracting new forms of financing beyond just the equity markets. I've never quite understood why mining relies on the equity markets as much as it did. If I speak to any of my friends in the tech sphere, once you strip away the jargon, it's exactly the same. We all look for unicorns, and they need to go through various rounds of funding. Yet in the tech sphere, people love to keep it private, and in the mining sphere, we push them out in the public sphere, and sometimes that makes them a little accident prone and not always as successful. Anyhow, point over, but I do think there is more to be done on the private side for mining, akin to what we see in pure tech environment.
And Libby, so BHP is obviously a major and an established player in the mining sector, but the program that you're spearheading is a new program, so could be considered a new player in the market. Maybe you can talk a little bit about what BHP Explorer is meant to do.
Yeah, thank you. So I think it's a perfect segue from what you were saying is that BHP Explorer has been in part designed to provide a funding avenue for juniors that means that they're not having to go out to market on a regular basis to raise money and dilute equity for the purposes of funding their exploration. So the Explore program, every year we're planning to bring in a cohort. That cohort each project will receive $500,000. That's in a form of a grant. So without an equity dilution or any kind of commitment from the company. And then that leads into a more formal investment period within 3 to 6 months. And so definitely trying to identify long-term trusted partners in the junior space that we can work with in the long run and help support the junior part of the industry.
John, I'll let you have the final say on this question. If there's anything else you'd like to add.
Yeah, well, there are a number of aspects to this. Yeah, it is. It's ever since I came into the city, it's evolved, and just walking into this building today shows how much the city has evolved, because it wasn't like this years ago. In fact, you could barely find a shop in the city to sell you a sandwich when it first started. So as a young mining engineer, I came in. I'd been with Goldfields for a little bit, and in fact, my colleague Simon Beardsmore had worked for Goldfields, so that was an early source of funding for smaller companies back in those days. And yes, we have many more sources of funding now, but it's great to see BHP and other majors stepping into this role again. So whilst everything evolves, it also evolves in kind of cycles. So the big mining companies have fantastic expertise. They also have access to cheaper equity in many cases. So it's very sensible that they should come into the smaller company area to look for new deposits. I guess for many years they didn't feel the need to, and we saw Billiton experiment with a fund some years ago, and then when Billiton ran a bit short of money, they just whipped it straight out again, I'm afraid. Hopefully that won't happen this time. I think this time it's all much better set, so the majors will follow through with more support, more joint venture programs, more of that. But running alongside that, we also see the trading companies have access to huge amounts of low-cost capital. Glencore, clearly the biggest name there, but name any trading group, they're all active either on offtake agreements, streaming agreements, royalty agreements. So there's so much of that coming through. So yes, it's been quite tough getting equity investment in, especially in the last few months with so much chaos going on in the world. But there are so many other sources of finance that it's not just equity anymore. The difficult thing is it usually requires some equity just to start things off. And we're busy working on incubating private companies, helping small juniors get up to the next rung. And if you look at the AIM market in London, it's been going for just over 20 years now. And many of those companies that started on AIM are still functioning, still developing, still adding value, and starting to come through.
You may have already answered this next question, but maybe I'll open it up to the panel as well. So what forms of finance are available to junior mining companies in the current environment? Where do all of you see the money coming from in this current environment?
I think it comes from all the sources that have been mentioned. I think availability is tailored though. Certain firms are better equipped to get access to certain pools of capital because they have their time in the sun. Think about, EV materials appears to be easier than precious metals at present time. That was very different 6 months ago. So these things, wean and wave. And I think for companies, it is important to just always be in the lookout and build relationships so that when the market and whatever that is opens up, then they can capitalize on it because they're perpetually in need of capital. And when they get offered capital, they should take as much as they can, really, because you'll never know what's around the corner. But yeah, it's just in the here and now, it's a certain type of company in a certain jurisdiction at a certain phase of development. That's not to say that soon that changes, but there is something for everyone in that big group of investors that we've discussed.
think it's also interesting with the battery thematic. You've got a lot of OEMs coming into the market now to secure supply, and I guess previously it would be very much a debt and equity game, but now because you've got that, I guess that increasing deficit, some of these OEMs are needing to source supply, and they're coming in with equity checks, which is very helpful because it provides that market validation for the company, and it also allows for other less nuanced investors to follow the pack.
John, you briefly touched on royalties, streamings, offtakes. Given who's attending this conference, more the junior market space, do you see that type of financing available for junior mining companies?
Yeah, we're seeing a lot of this actually. It's mainly when a project gets to the feasibility study point where they've proven up and de-risked the project to a certain degree, so the funders, the traders can see that there is future metal. But as competition has increased in that marketplace, these guys are starting to come in earlier and earlier because they're very keen to find where are they going to get the next 10,000 tons of copper or whatever it is, and it's not easy to find it. So they're having to take more and more risk onto their books as part of that. It's interesting what David said. There are fewer banks lending project finance these days, which is a bit of a gap in the market actually. I still think projects are going to get done, but it just means that there's slightly fewer. There's a bit less competition in that end of the market.
Yeah, I've seen, at least from a North American perspective, more from a Canadian perspective, the Canadian banks are becoming much more risk averse, and I don't know if the European banks are following suit, or they're trending in a different direction. Anyone wants to touch on that?
The classic kind of BNP and SocGen and the likes are definitely erring on the side of caution, but that's thrown up an opportunity. We saw Nordic Mining take out a project loan through one of the Scandinavian banks. So there's another kind of more innovative product that is being brought in by the Scandinavians. Not on their books. They'll get it off their books, but again, it goes to show that there is another route of accessing capital for a project that is a bit more left of center. Rutile up in Norway, but it is possible to find debt funding for those as well.
And I think that's where, as BHP Explore, we're trying to fill that gap in BHP's exploration pipeline of those early stage, concept-driven, maybe slightly left of normal ideas that typically for a major we may not have previously considered because of the risk profile. And so Explore is being designed to allow us exposure to those kinds of projects in a different form of financing and support.
Moving on to the next question, I think, David, you may have mentioned the EV minerals and there's a bit of a supply crunch for critical minerals. I don't think any of us are American, but recently the U.S. came out with their Inflation Reduction Act. Does anyone see that the imposition of that act creating further impetus, liquidity in the market? Is it going to spur more investment in junior mining companies?
Yeah, I think it's really interesting that previously it was all about the cost and the specifications of the product, and broadly all of these products was coming from China, and now there is I guess policy initiatives to incentivize supply coming from other more Western orientations. So that is very helpful. And it's up to the OEMs to decide whether they want to stick with the low-cost specifications argument or they want to potentially pay more for supply coming from other origins. And now it's very much the excuse is previously that there was no other supply is seemingly reduced now. So it's more of a choice, and it depends what they choose.
Yeah, at long last, the West has woken up to the fact that China controls certain markets almost entirely, or they can control them entirely if they want to. In fact, China recently gave a green light to lithium processors in China to go out and sign long-term contracts. It actually, the minister of whatever it was, told the companies to go out and sign those contracts. So that's a green light for offtakes, acquisitions, all sorts of things in my mind. And the Western car makers are saying, "Holy crap! You know, we've got to deal with this because otherwise there's going to be nothing available." The IRA, the Investment Reduction Act, is already being effective. We saw Piedmont Lithium get a big chunk of money. They're dealing with Atlantic Lithium in Ghana. We're a London-listed company operating in Ghana. That money will feed through into those guys in order to develop that supply chain and the Piedmont's new refinery. So it's just one example of, I think, many things that we're going to see, not just in lithium, but across the battery supply chain.
Yeah, and I also found it interesting. There was an article in the Canadian newspapers a couple of weeks ago where the U.S. government is looking into investing in the Ring of Fire. And as a Canadian, it's a bit embarrassing that a foreign government, even though it's our neighbor to the south, is looking to invest. I sort of wonder why the Canadian government or Canadian enterprises can't invest in it. It's obviously it's a well-known project. It's been around for many years, but I think that just goes to the seriousness of the issue that the Americans think there is with the supply crunch of these metals. And if the investment comes from the U.S., then so be it. I think it will alleviate the reliance on China and on foreign actors. And that wasn't really a question. That was more of just a statement. So I think that this act is going to help spur investment in the industry, but really the act covers a whole bunch of other things, and I think it's really left to the private industry to continue to invest in critical minerals. Moving on to the next question, given the sort of higher inflation environment that we're in these days, are there still deals available for junior mining companies? Given the current environment, is inflation impacting investing in the junior mining space?
I think there are always good projects and bad projects, and inflation is a huge issue at the moment, both on the OPEX side and the CAPEX side. But there's always going to be projects with better margins, and they're always the projects that are going to get financed first. So while there has been CAPEX increases and OPEX increases, ultimately the good projects will always get done, and we're seeing that. So it's just that the margins are being squeezed a bit, and there are times in the cycle when people will go for high cost projects. It's a limited part of the cycle. It's certainly not now. So people are now focused on what the DFS will look like if they have to redo it because it was done more than 12 months ago.
I think cost inflation is going to sort out the men from the boys. In many respects, costs were too low pre-COVID. The world was sort of slowing down at the time. There was intense competition around the world to sell equipment. Russian manufacturers were actually undercutting everybody else. Chinese manufacturers more expensive, but with China, it's buying the package. If you want to, you can build mines more cheaply using Chinese machinery if you employ the Chinese people to build the whole project. That's the way it seems to work with those guys. So yes, there is quite a lot of cost inflation. I would just add as a guess, reckon there was about a 30% cost inflation jump between 2019 and where we are today. I'm sure that some of that is settling back a bit. Maybe if the Ukraine war ends and we have some kind of new peace, perhaps things can pull back a bit. But in reality, this environment is going to sort out the men from the boys, because those people who really understand how to build projects more efficiently, more cost effectively, are going to stick to their budgets. Whereas, I spoke to an investor yesterday who reckoned that everything would blow out by about 50%. And so as analysts, as people who are looking to finance these things, we're mindful of that. We'll be building that into our financial projections going forwards.
I think something else you see is people adapting, which is always a great thing to see. And a key example that springs to mind is the projects that are now reconsidering their energy dependence and are repositioning to have their energy come from a combination of wind, solar, and battery. Are recognizing that they have an opportunity, if they're still prior to entering into construction and commissioning, to think about what type of fleet that they want, and all of that is in part also driven by high energy prices and hence inflation. When gas was next to nothing, everyone in the WA goldfields was talking about tapping into the pipeline, and all of a sudden they're now talking much more about renewable energy solutions.
Funnily enough, this was one of the things that came through in whilst everyone was locked down for COVID, was there was a lot of rethinking of projects, re-optimization of projects. And okay, yes, there is this cost inflation, but actually I've seen projects where people have knocked 10, 20% off the CapEx by just saying, well, realizing they could do something in another way.
I think there's another component to resourcing which this cycle is going to challenge as well, which is the ongoing human resourcing challenges that the mining sector faces. And as unfortunately is in the way, when things get tight, we lose skilled professionals out of the industry, and that is a challenge going forward again, that sometimes new ways of doing things come with losing good people from the industry. And how do we maintain that in the human resource supply crunch that is predicted to come?
So then, just following up on a comment, John, that you made, separating the boys from the men, is liquidity coming back into the junior mining space? I've noticed, at least from the Canadian perspective, that the equity markets are, I wouldn't say quite dead, but they're very moribund. Like there's just not a lot of equity investment going on in at least in the Canadian market. So, is there liquidity? Is it as simple as saying only the good projects are going to get financed, or do we see more liquidity coming back into the mining sector?
Well, if you're looking at equity liquidity for small companies, the better the company is, the better the liquidity almost always is. I mean, you sometimes get us into a situation where you have a really great company and nobody wants to sell it, and if there are no sellers, there's no liquidity. And at that point, an enterprising broker will go out and say, "Why didn't you issue some more stock to try and help that liquidity?" And that becomes a chicken and egg issue, because then the big funds will say, "Well, we'd love to buy this, but there's no liquidity in it." And liquidity is a bigger issue. It's a big issue in the wider market. Ever since the Woodford funds went down, all the fund managers with those sorts of funds have been terrified of not having enough liquidity in case they get redemptions. So we are fighting that. But I see the regulators are starting to address this issue, and I think they will allow investment funds to develop more risk appetite again going forwards, but not quite today. And you're right, over the last 6 months, liquidity was not good in the mining sector. Everybody was really worried about impending recession and the impact of high energy prices and the energy crisis in Europe. And that's all still there. But in the last couple of weeks, certainly there's this resurgence of interest into certainly anything related to battery metals. And then we saw Resolute Gold do a big fundraising, $140 million, with 55 million of that coming out of Californian gold funds. So there is money around for the right thing.
David, Pim, any comments?
Yeah, this goes back to my earlier statement that mining companies, in my view, go to the markets in some cases too early, accessing funds that need liquidity, whereas there's funds like us who don't have that requirement and who have a genuine long-term investment horizon and look at the technical success of any of their investments, as opposed to any given day what the market is willing to pay for it. So, I do think that if you think carefully about how you want to build your register, and you pivot towards more longer term investors as opposed to shorter term churn investors, then you might insulate yourself somewhat from that. And yeah, there at the time that you are seen in the market as someone that can easily attract capital, then not only go for extracting that capital, but also carefully think where you're going to get that from, because the days in the sun are not going to last, and you're going to thank yourself if you thought carefully about which shareholders you brought on board. It's going to help you in the long term.
I also think with the current battery thematic, a lot of these mines and processing plants are more like chemical factories than mines. So the old CIL or flotation plant for gold and copper respectively is a bit more different these days. So I think a lot of the investors are really requiring that market validation, from people who know what they're doing. So that OEM investment, those offtake agreements, that's what really needs to happen before the general investor who think they know about mining but perhaps don't know about lithium processing or whatever. They need to see that before they'll go in, I think so.
I actually have a question for the panel off the back of this, because obviously from BHP's perspective, we've thought a lot about what the Explore program will be able to do for juniors. But a question that certainly I haven't asked, and I would be curious to know from the panel, is what they think investors' views are going to be of companies that are chosen to participate or choose to participate in the Explore program.
I can tell you my real life experience. I ran Extrata Ventures, which is not too dissimilar to yourself. And there's times that they absolutely love you, and there's times that they absolutely loathe you. And it very much depends on the day in the sun. But I'd say, if you stay the course, that's noise, and back the project and continue to be seen as a good partner to the management team and progress the project, then ultimately you will prevail. And the proof will literally be, as they say, in the pudding. So, I wouldn't necessarily look too much to the market for love, because the market is very, very fickle. And just stick with the companies that you back, and stick with the management teams that you back, and build those good relationships, and let that be your marker of success, as opposed to what any given day any analyst or broker says, who has invariably their own agenda when they make that statement.
It's a good point from Pim, because there are a lot of really great people who run these junior mining companies, but the teams are small and they're kind of a bit on their own. And as you say, you can get roughed up by the market sometimes, depending on which way the wind's blowing. And for the majors to actually step in and mentor these companies, give them good advice. To name one, First Quantum Minerals freely gives good geological advice in Zambia. They don't ask a lot back for that. They're just trying to help everybody find things. Presumably, when those guys find things, they'll step in and acquire them. And hopefully that there's a benefit to them there as well. But this whole idea of helping, assisting, and mentoring, I think, is just good for everybody.
So, and this question I think is more for David, John, and Pim. So how do you see the London investment community helping junior mining companies? What role can the London investment community play in expanding liquidity in the junior mining sector?
I think we've got an amazing pool of talent here. We understand, as a community, mining and resource investing very well. We understand the timelines. We've shown to be innovative. There's a lot of innovations in the funding sector that come out of London or that are headquartered here in London. So I think as a city and as an industry, we should build on that. I'd like to see us building more of a profile with the next generation. I think that's where we can do better. I think London's got an amazing pool of highly talented and ambitious young people, and I'd love us to continue to take our fair share of that pool of labor. We don't always do so well in explaining ourselves and explaining why we are so relevant, and particularly in the city of London. that's a little bit more difficult. To do that in a place like Australia, where mining features on the news, is a much easier pitch. So we need to go out of our way a little bit more here. But we got all the right ingredients, networks, and systems in place to continue to be successful.
Yeah, I think it's fair. 20 years ago, big fund managers didn't need to look at mining. It was such a small part of their portfolio. And then BHP came to London, Rio Tinto grew into a bigger business, Anglo came to London, and others. And so mining became relevant, actually. And so there is this new generation of fund managers who are now started to grow up through looking at the mining industry, learning about it, and there's a bit more expertise in the fund management business than there used to be, which is very nice. And now what we need is the companies to sort of grow into that space, and it's definitely working. It has its ups and downs because that's the way markets are, and with this evolution of so many more sources of financing, I think that's created a more robust market than we had 20 years ago. The development of AIM, it can feel frustrating sometimes because of the tight regulation, but that regulation has created confidence for investors to know that there is a great deal of monitoring going on. So I think all it needs is just a little bit of love and support.
Okay. Final question for the panel. What, in your view, what do you think the majors and financiers want to see from junior mining companies in terms of how they focus on their business in the next 12 to 18 months? What should juniors be focusing on from a major's perspective, from a financier perspective? Maybe Libby, will start with you.
Yeah, so I think, and I will answer this somewhat in a technical line because that is more my comfort space, but we are definitely looking for the ideas and concepts that are going to push us into the next generation of resources. But to see those concepts being well defined, well thought out, the conversations I've had in yesterday and that I hope to have today, it was interesting how many comments were that pauses in exploration programs gave teams the ability to really think about their projects and better define them and do the work that sometimes the markets and the drive for investment doesn't let them do. And so from a major perspective, when we see those projects come to us that have had the time and the thought put into them, that is always better received. And so I think there's something to be said for considering that from the junior companies.
I couldn't agree more. I think the standout investment opportunities for us, and indeed the companies we invested in, did solid technical work. And if you go through the hassle of drilling a hole, then I expect you to fully log it. And if you think that there is something that could complicate metallurgy, I expect you to be on the front of it and do all the analysis, even with early samples. If you have lithium, I expect you to tell me whether it's spodumene or lepidolite and not just say that you've got a lithium grade and leave me in the dark, and so on and so forth. And I think seeing that quality technical work is extremely important, and be less beholden to the fickles of the market who just want to see the headline and run on. Because ultimately, if you really are serious about taking your project through the development phase into construction and commissioning, you need to have all those answers, and you need to have those answers early. And too often do we see people take shortcuts, and that results into spectacular blow-ups that none of us like, but that we all get associated with. So if there's simple one takeaway, it would be continue to do very, very solid technical work, walk the ground, get away from your desktop, and use the data that you have to extract every single data point out of it, because there's a wealth in there. And it's not just 2 meters at 2%. There's a lot more in a hole that you drill that you can learn from it.
I think echoing Libby's point earlier about the lack of depth in operational personnel, I think it's pretty evident at the moment. And a lot of, I guess, development companies have got away with producing a very pretty DFS and then not having much under the surface, and they're expecting it to get taken out because maybe mid-tiers had quite a lot of operational personnel to spare to go and have a look at the DFS and just check out whether they wanted to buy it. I think these days you don't have a lot of spare capacity in the companies that are willing to buy projects. So ultimately, the only way for a junior to get their full value out of the DFS is to actually look like they're going to buy it and to go through with best practices with regards to the operational team to really push it forward and then truly de-risk it to allow a mid-tier to come and buy it without having to redo the DFS with the current capex inflationary pressures, and also just move on and take it over with the current operational staff in place, rather than having to take a bit of paper off the shelf and then ostensibly redo it, because there's just not the personnel to do it these days.
All I'm going to say is come to SB Angel. We'll ask the difficult questions. We'll help you get your presentations in place, and then you can present to these guys, and hopefully you'll get it right.
Excellent way to finish off the panel. We have a few minutes to spare, so if anyone has any questions from the audience for any of the panelists.
Yeah, one other source of financing which we haven't mentioned of interest on the penalties is in Canada. Obviously, the government supports flow-through financing for Canadian projects. And I'm not aware of that in other countries, but now with critical metals becoming, so coveted by governments, I would think if any other governments potentially are going to adopt a similar form of, I guess, government aid to have this in their jurisdictions, that may be just another place for juniors to have a look.
Well, we just saw an announcement this morning from Macango Rare Earths, who've got some money, grant money from the EU, and we are seeing a lot more of that kind of thing. One of our private graphene clients got some money from the UK Innovate Fund this week as well. So there's definitely money from the Inflation Reduction Act in the States. So yeah, there's much more of that coming through.
If I could have my cake and eat it, I actually think that the funding isn't the angle that you should focus at. It's permitting. And I think a lot of projects get slowed down or don't have access to permitting, or don't have access to capital, because either the permitting is unclear or it's extremely slow. So slow that it goes beyond people's investment horizons and they look away and the company can't get access to funding. I think if governments want to do themselves a favor and see their projects develop, then they should focus at permitting, including in the US, because Piedmont is on a brownfield, but there's plenty of greenfields that are mired in permitting for donkey's years, and I can't see a way out. And the same with Europe. Europe could do itself a huge favor by spelling out permitting environment. Look at what's happening in Spain. Look at what's happening in Portugal. We got projects in Germany, but no one's permitted the project in Germany for a long time. All that uncertainty, once you remove that, the capital will come, and it will come in amounts that is way bigger than any flow-through equivalent could ever match.
I would say that's a really good point, and it applies definitely to Canada too.
Yeah, Ring of Fire that was mentioned earlier is a case in point. Yeah, and it's way more than the hundreds of thousands that a company could access. If you give me a line of sight on permitting, I will open my wallet. But the key thing that is very difficult for us to get our head around is the long permitting timelines that we're confronted with and the huge uncertainty, because it's binominal. My money literally is a 0 or a 1. It's not 50 cents because I get a halfway house. No, it literally is binominal.
Any other questions?
I have a question about AIM. So currently, is it a market more for juniors raising capital or more mid-tier? And where do you see it going?
It's definitely a junior market as we stand. If I think of companies that have grown within the AIM market, they get to, let's say, $1 billion or 500 million pound market cap or something like that. And then they think, oh, we're too big for AIM. And then they move up. And then they realize that actually they're suddenly swimming in a pond with much bigger fish in it. So it's almost always a mistake to move off it until they are, let's say, £2 billion or something like that. But they kind of get this urge to move up a grade. But yeah, it definitely helps companies move through. There aren't that many mid-tier companies in AIM at the moment because they will have made that transition. So yes, it's definitely a junior market right now. It comes and goes. We had a few lean months over the summer, but we're now raising money again for quite small and challenging companies. So yes, markets are back open. I wouldn't say the floodgates are opened at the moment, but definitely we're getting things done.
Okay. Well, thank you very much, everyone. Thank you for participating on the panel.